And so with that, we hand over to Nastasia Arinsa with your markets news.
Thank you so much, Nompumelelo. Well, of course, we typically start off our markets coverage looking at what's happening from the Asian side of things. However, this time we're going to take things a little bit differently and start off with the picture from a European perspective. European markets higher at this stage, with the banks leading the gains after the European Central Bank increased interest rates to 75 basis points. Mining stocks also higher there, helped by the high metals prices. And then just to talk a little bit on what you've just mentioned regarding some of the events we can expect at least over the 10 to 12 days. The London Stock Exchange releasing a statement saying that trading will continue as normal, and if anything does change, they will communicate it rather to the markets. It is expected that on the day of the funeral of Queen Elizabeth II, that it will be a public holiday, and in that case, in that particular scenario, the London Stock Exchange will be closed for trading. Nonetheless, when we look at what is happening from the Bank of England side of things, receiving a bit of a lifeline, at least in the short term, and this is through Prime Minister Liz Truss's huge power bailout. The tariff cap is expected to cost £100 billion, or in dollar terms, about $116 billion or more over the next 2 years. However, to talk to us about the latest in market dynamics, touching on some of the global aspects, UK as well as the European side of things, we are joined by Thato Mashego from Sanlam Private Wealth. Thato, thank you so much for your time. So before we get into the other aspects, looking at the UK and the Eurozone, etc., what's your sense of global market sentiment right now, given the fact that we're pushing ahead with aggressive policy, and yet we're still dealing with the stuff that we've been focusing at least on over the past few weeks or so?
Good afternoon, Nastasia. Market sentiment at the moment seems to be taking somewhat of a risk-on perspective. We have the first positive week in the S&P 500 and MSCI World Global Equities in 4 weeks. So we've had quite a few weeks of negative downturn. And of course, in August, there was quite a bit of negative sentiment from a mix of policy measures from the Fed, as well as concerns around impending recession in various markets. But yesterday's comments, or hawkish comments from the Fed, saying that they will continue on their path to taming inflation while still trying to manage the economy and prevent social distress. The market took those to be quite positive signs, as well as the 75 bp hike that you mentioned from the ECB. There also seems to be a bit of a positive view with regards to Chinese demand possibly picking up in the last quarter of the year. We obviously know that there have been increased lockdowns recently as well, but some participants in the market feeling that this is not going to be as prolonged as what we saw with the Shanghai lockdowns. So some positive perspectives seen today on the markets, and the dollar has softened, and we've seen risk assets responding favorably.
So let's talk a little bit about the British pound here, because the weakness is the story here, the predominantly, I suppose, call it dollar strength. But perhaps you can give us a little bit more perspective when it comes to the underlying challenges faced by the UK economy.
The pound, of course, has weakened considerably year to date, and we now have the pound at levels not seen since 1985, which is quite some time ago. So I believe the pound to the dollar is at 1.14 at the moment, and there are significant challenges that the UK economy is facing. You know, that inflation at 10.1% year on year on the last reading, coupled with what some would argue has been a slow response by the BOE in terms of initiating its rate hiking cycle, as well as the issue with energy prices, which is being faced by the whole of the Eurozone with regards to natural gas imports from Russia. And coupled, or rather on top of this, we have a fiscal situation which may deteriorate in the short term, especially given the recent announcement by the new Prime Minister in terms of gas caps. So a combination of a weakening currency, heightening inflation, somewhat behind the curve central bank, rising energy prices, weakening consumer demand, and a deteriorating fiscal situation has led to the currency being at its lowest level in more than 30 years relative to the dollar.
On that note then, regarding Prime Minister Liz Truss's pledge to deal with the high energy costs, what does it mean for the Bank of England? Does it help or hinder them when it comes to their fight against inflation?
It may hinder them to some extent. Now, the government has said that they feel that this price cap will reduce inflation and lead to lower borrowing costs in the region of £10 billion on a monthly basis going forward. However, spending 150 billion on a price cap strategy obviously means increased bond issuance. The government has ruled out windfall taxes, and so this will be funded by heightening borrowing costs, which means that we expect bond yields, of course, to respond and to increase. And this makes the BOE's job more difficult than it was before, because this would offset any benefits from lower inflation from the caps on electricity prices. And so it does complicate the picture as well. Another risk, of course, is that this cap becomes permanent. Now, it has been set at 2 years, so it would expire in 2024. But if gas prices have not moderated by that point in time, and no one knows exactly what the outlook is as far as geopolitical concerns are. So that could lead to the gas policy being maintained. Even worse, if gas prices continue to increase in the short term, then of course the government has to cover that subsidy in terms of the margin between where the cap is and where market prices are. And so that is also a concern. Another issue with the gas policy is, of course, it focuses on households, as it should, but in terms of business, the cap only lasts for 6 months, following which I suppose the government will look on an ad hoc basis and decide which industries to continue supporting. That itself could be a quite contentious situation. So there are a bit of uncertainties with regards to how successful this policy is going to be. And of course, that does complicate matters for the Bank of England.
Tata, thank you so much for your time. Unfortunately, we have run out of time. Would have loved to get your perspective in terms of your sense regarding local earnings season so far. Nonetheless, we'll continue to cover all of that next week with the likes of First Rand releasing numbers on September 15th and a day before SABC releasing their interim and full year financials. That is it from me. We're going to take a break. When we come back, we'll have more news for you, so stay tuned.